Good afternoon, traders and investors. Will back here with another one, coming to you with a Tuesday market update. Hope everybody had a beautiful day. And in today's markets, guys, a landslide of red, unfortunately. Today was supposed to be a relatively muted day. There wasn't really much macro news that was supposed to be released, and largely everybody was expecting this to be a fairly muted week as a whole. But it's definitely not starting out that way, is it? So this day was pretty much what I like to call a surprise attack by the bears. After such sideways consolidation here, trying to go for the breakout, the bears have just surprised us to the downside. And in the process, the bulls have lost a few key levels on the SPY and on the NASDAQ that have to raise a few red flags for us. So in today's video, we're going to be going over those red flags in the technical analysis portion of the video. Additionally, we did have one piece of news that heavily affected the healthcare sector dropping the most in one day since November of last year. So that sector had a very big sell-off. We're going to be covering that news as well. It has to do with insurance providers for healthcare. And then, of course, we are going to get into the Tesla delivery numbers that came in as well today. Unfortunately, under the expectation. So we're going to take a look at exactly what happened with Tesla's deliveries, and we're going to cover that in the later part of the video when we go over our big tech specific technical analysis in the Tesla section. So we'll be doing all of that in today's video here, guys. So without further ado, let's get right into it. So SPY down 0.64%, QQQ down 0.86%. Nothing having a good day at all. Healthcare at one point, guys, today was down almost 2%, a very steep decrease indeed. So let's take a look at the heat map, guys. It was not pretty today, to say the least. Now, in terms of the heat map, you can see that most of everything was red. Healthcare, red. Healthcare plans, big red. Take a look at some of these losses, guys, right? UNH, one of the largest healthcare providers in the country, down 6.5%, one of its worst days in recent memory. And the damage was not only done to them. You can see even Humana, another big health insurance provider, down 13.5%. Even CVS, which operates in that line of business too, down about 7%. So them definitely not helping the larger healthcare sector. In terms of big tech, it was pretty much more consolidation, except for Meta. All of your major tech names, even semiconductors, ending in the red, financials pulling back as well, and the bottom half of the market not healthy either, except really for energy. That is off the back of continued increases in oil prices. Oil prices have really just been steadily grinding up since the month of January, so energy has been one of the better benefactors of that trend. Now, in terms of the one-day relative performance, guys, you can see really only energy on the green side today. Everything else in the red, and heavily in the red, guys. You can see there's a few names on this chart, guys. We're coming into the 2-3% mark for some extended consolidation on a lot of these names. Now, in terms of what happened, let's go over in the major headlines of the market and what did Wall Street and the mainstream media, what do they give as a reasoning for today's sell-off? And then we're going to get into what I think happened today as well. So let's go over the headlines. Dow tumbles nearly 400 points, falling for a second day in a rough start to the new quarter. Obviously, start to the new quarter is the 1st of April yesterday, right? So the second quarter for stocks is off to a rough start as sticky inflation data to end last week and some strong economic data on Monday send yields higher and reduce odds that the Fed will cut rates in June. So higher for longer. This has always been the expectation, but now perhaps markets are finally starting to face the music that higher for longer may just not mean equities to the absolute moon. Stocks came under pressure Tuesday as the 10-year Treasury yield jumped its highest level since November 28th. Oil prices also surged to highs last seen 5 months ago. Take a look at these yields here, guys, right? 10-year yields up significantly. At the top of the day, you would have only seen this level last November 29th, and even on the 20-year yield as well, right? All the way up to about almost 4.7 today, a level not really seen once again since the later part of last November. So that definitely did have a big impact. And you can see the continued grind higher on the oil charts as well. Oil getting its highest price since pretty much last October. So everything, guys, in terms of inflation, right? And just showing that the markets are just reacting negatively now to higher for longer. Even though nothing really has changed in the overall markets, now the sentiment of higher for longer is potentially finally starting to set in with retail and institutional traders alike. That, combined with this following paragraph, what we're seeing is a 1-2 punch with the combination of continued hot inflation data with profit taking. With very significant Q1 market gains, we're due for a little correction, said Greg Basuk, CEO of AXS Investments. But we think that the investor narrative also continues to be higher for longer, but with respect to interest rates. Now, we also had another comment here by Sarat Sethi, managing partner at Douglas C. Lane and Associates. Now, he remained unfazed by the sell-off and called it a natural digestion after equities have come up fast and quickly. That is what we've been talking about also on the channel for the past couple of months, right? May just be time for a little bit of a technical correction. Regional Fed Presidents Mary Daly of San Francisco and Loretta Mester of Cleveland both said Tuesday they anticipate rate cuts this year, but do not expect to start easing anytime soon. They actually both reiterated today for 3 cuts for the year, but as I was saying yesterday, guys, there is just no urgency on behalf of the Fed. They are more scared of decreasing rates sooner than they are later at this point, so they're going to maintain firm. Keep in mind this week we have every single Fed member speaking at a certain point over the course of the week, and I do expect them to reiterate exactly what these 2 Fed members said today, which is exactly what Jerome Powell said in last Friday's symposium, where he was speaking in terms of keeping rates higher for longer. He just maintains the exact same speech, so nothing really has changed in that respect. So let's go over, guys, a few things that we were talking about on the channel previously as well, right? So let's go over a couple of our bear thesis scenarios, right, that we could be due, or that could rather derail these markets as they currently stand. Now, number one, inflation will uptrend. Now, most of these elements of the bear thesis are all things that take several months to play out. So none of these have actually materialized just yet. Inflation will uptrend. That is not here yet, guys, right? Just not uptrending. Is it sticky around 3%? Yes, but do we see a net uptrend in inflation? No, not yet. So this one is not yet happening. Number 2, banks will default on commercial real estate. This is also a concern, but not yet materializing. Number 3, fewer rate cuts than expected. Jerome Powell has said recently in the last 2 weeks, 3 cuts are to be expected, and we got the summary of economic projections 2 weeks ago on the Fed meeting on that Wednesday, and most Fed members also see 3 rate cuts decreasing for this year, and we just literally got today 2 more Fed members saying that 3 rate decreases were the most likely scenario. So fewer rate cuts, still not yet on the table. They're still gunning for 3 total this year. Jobs data decline. Well, so far, that also has not been materializing. We have a big jobs report coming out on Friday. We got the JOLTS jobs report today, and it showed that the jobs openings were relatively healthy. We'll take a look at the big jobs report on Friday, the non-farm payrolls. But as a whole, guys, jobs market is still healthy. Economic decline. This one, obviously not. We got GDP numbers pretty much last week, and it showed that the economy was still very, very, very healthy, and that all Fed members are expecting the GDP to continue to maintain a pace of about 2 to 2.5% over the course of the year. So the economy is not in jeopardy right now. The only one that remains is greed leading to a technical sell-off. Keep in mind here, guys, right? We have been very extended. It's been a beautiful, beautiful, beautiful past 4 or 5 months at this point, but a lot of our major sectors are in the greed territory. Overbought conditions on the weekly and momentum starting to curl over. This is what that weekly MACD means down here. SPY is not yet curling over, but take a look at QQQ. QQQ just starting to now dip into red territory on your momentum. XLF financials as well, coming heavily down off of their tops right here. Momentum is starting to curl to the downside, and even healthcare, guys, healthcare as well, MACD starting to curl, and your RSI now plunging severely. So a lot of these momentum indicators just show that potentially bulls are tired for now. Couple that with the fact that we're still in greed territory, and the fact what these analysts were saying as well, right? It's been a great first quarter in the market so far. What institutions sometimes do at the end of a quarter is they will take profits. They obviously have to show their investors what they made through the quarter, and then potentially take profits and reallocate those profits into different plays if they want to. So in that case, after such a beautiful quarter, you may just have some institutions and even retail traders alike taking profits off the table after such a significant rally, guys. We would not be surprised still if we can get the sell-off event. Now, prior on the channel about 2 weeks ago, we were leading into the Fed meeting saying if the macro outlook of the Fed changes, then we're definitely going to get some repricing to the downside. We did not get macro changes as observed by the Federal Reserve. They did not think that January and February inflation coming in hotter than expected was a problem. So there was no macro shift there, and they also reiterated 3 rate cuts for the year. So no macro shift. But does that mean that we don't necessarily have to have a technical sell-off? No, not at all. We can still have a little bit of a technical sell-off. It won't be a macro-driven sell-off until, up until now, because none of these criteria for a macro sell-off are being met. But the technical sell-off criteria could indeed be met. I say this all the time here, guys. It's been a great rally so far, but in the last 5 months, how much have we ever pulled back on the SPY? Sometimes 2% right, sometimes not even 2%. Just take a look at some of your prior true bull markets, right? In the context of an overall bull market like 2020-21, you can see some 6-7% sell-offs on SPY, 5% there, 5% there, and another 5% here, right? So all in this context of this glorious uptrend, we've had sell-offs. If you want to go prior to the pandemic as well, take a look at 2019, right? 2019, overall bullish trend right here, but still some extended sell-offs, sometimes 6% in the overall context of the bull market. Go back to even 2016, right? 2016, overall very nice uptrend, but you do sometimes get some 4-5% sell-offs in the context of a overall bullish market. So could we be potentially looking for some weekly consolidation that we really have not had, guys, in the last 4 or 5 months? Yes, and a few key indicators have lost some levels as of right now, especially on the SPY and the QQQ. So we're going to be taking a look at those right now. We're going to get into our technical analysis on SPY right away. So let's get into it, guys. So in terms of SPY, what has manifested now is we have a double top, and we were warning about this in yesterday's video. What is the red flag scenario? If we lose the lows and set a daily downtrend. So the bears have 1 point in their favor. They have set the daily downtrend. We still have a trend line protecting us, but these trend lines, guys, are not set in stone, right? If ever we lose the trend line for an extended period, something like this, well, we can always just resume trend in a different parallel type of channel, right? This has also happened in the past. You don't even need to look too far back for this, right? If we go back to our previous markets, our previous bull markets right here, you can see that trend lines can shift all the time, right? We had a glorious trend right here. Right, I'm going to do these levels really approximately, and you can see that we lost the trend right here and then resumed after a little bit of sideways movement down, right? After about a 7-8% sell-off and staying relatively flat in these areas, we just resume the trend at a later point, but it's going to be a different trend channel. So that's why I don't put too much importance on the trends for our long-term bulls, right? But in the short term, it does definitely stand out to us, guys, that we're coming very, very close to our trend line right now at this point. Couple that with the fact that the MACD and your momentum is waning off for the bulls right now, and you may be looking at some technical sell-off. So far, the SPY has not lost any critical levels. For that, we really need to look down to this level right here, 515. Lose that, you lose the trend line. You could set up the bears for a potential flush down here, which would most likely result in a loss of the weekly. And then we would just be looking for a weekly higher low, anything above 490, right? Try to get the weekly higher low here and then potentially just recapture this over the month of April. In terms of seasonality, guys, April, especially in election years, seasonality is supposed to be relatively good. Now, February and March were not supposed to be good. We got continued rallies. So could this potential sell-off be put into the month of April? Very possible at this point, guys. It's very tough to predict the short-term direction of the market. The only thing we can do is go with who is in control of our long-term timeframes and the long-term macro. The long-term macro still looks good, and your longer-term bulls are in control. The monthlies are perfectly fine. The weeklies, as of now, are perfectly fine as well. We're just looking for some shorter-term triggers that may be an indication that 2, 3, 4 weeks of choppy sell down may potentially be coming. So take a look at this, guys. Usually April is a pretty good month. Even in an election year, the sell-off usually comes in the month of May before rallying the entire rest of the year. So if we do get a sell-off here, guys, I still reiterate, still the same thing that I've been saying for pretty much the last month and a half at this point. If we get a sell-off, I think it's going to be one of the last good buying opportunities before everything will be significantly higher in the second half of the year. So we're going to stay very diligent on this and look at it one day at a time. So far, SPY not looking too bad. Even if we lost the daily uptrend, we do still have this large support area and we are still above our trend line. One day is not enough, but it definitely was a surprise attack by the bears. After the bulls had set themselves up so nice for continuation, we have just now unraveled after one day of trading, unfortunately. So we're going to keep a close eye on how the situation develops for the rest of the week. Now, moving on to QQQ. QQQ, the red flags are a little bit more here, guys, because QQQ actually did lose the trend line on the QQQs. If you were to look at the NASDAQ futures, I mean, look, they were losing it for a better part of the day before ending in recovery style and ending largely, close to on par with this trend line right here. But QQQ as well, daily downtrend now is underway. I apologize, guys. I'll make this a little bit bigger for everybody to see, right? So at this point, guys, the daily uptrend is lost. Daily downtrend is confirmed into a trend line flush, into a loss of a few key levels here. We lost the 18,000, that's this yellow line right here, lost the 18,000, and we're now below both moving averages. So on a technical basis, guys, your bears are now in short-term controls of most of the levels. Daily downtrend underway, we're potentially losing the trend line, losing the moving averages, and we've lost our most recent yellow line of support. All is not lost in one day of trading, however. This is still very close, similar to how it was back here. Daily downtrend, loss of this support level at that point in time, right? And coming dangerously close to losing the trend line. So we'll monitor this situation very closely over the next coming days. But one thing is for sure, guys, it has to stand out to us when there's so many technical red flags on the charts right now, right? Crossing of the weekly MACD that has not happened in the last 5 months. Loss of the trend line potentially that has also not happened in the last 5 months. And now you're coming into it with some momentum on the part of the bears. So we'll be keeping a very close eye on how the situation develops. But as a whole here, guys, right? Very, very dubious territory, just to say the least. So quarterly rebalancing by a lot of institutions was starting the month of April off a bit negatively. A lot of your daily uptrends have been lost, as we've seen in SPY and QQQ. And number 3, the MACD crosses. So these 3 technical indicators could be showing that more sell-off is underway. We just have to keep a close eye because, as I said, guys, one day is not enough. We need to see this happen over multiple days to really confirm that a lot of these breaks are real. Now moving on to financials. Financials still healthy, as a matter of fact, still in the context of an overall daily uptrend. At least financials have not lost that. So the daily uptrend on financials is going to be our guide, as well as the 12 EMA. You can see they haven't lost that as well. So financials holding up better than the rest of the market. But just keep in mind, guys, that financials as well completely overextended on your weekly RSI. And it does appear that momentum is slightly waning for the industry as a whole. That being said, we're in the context of a gorgeous weekly uptrend. And if we were to lose the daily uptrend and lose this 12 EMA area, set a daily downtrend and head into weekly consolidation, look how much space the bulls have. Anything above 37, just going to be for a weekly higher low for further trend continuation. So short-term bulls still looking okay, long-term bulls looking beautiful, and even long-term bulls on XLF, the monthly, is also looking beautiful too. SPY and QQQ just the same, right? Weekly is looking absolutely fine here, guys. Still not in any territory of losing our long-term narrative. And even in QQQ, guys, even though we've been struggling here for a better part of the last month and a half on big tech here, or tech as a whole, still no longer-term indications that this market is in jeopardy of losing our long-term bullish momentum and long-term bullish trends. Now, moving on to healthcare. So healthcare really not having a good day at all here, guys. We lost a few key levels, and here's what happened in healthcare as a whole. So let's go over the headline that came out today. Health insurers tumble as final Medicare Advantages rates disappoint. So we'll explain that. We'll go through the article, and then I'll explain it in layman's terms if you don't understand what the article is depicting. I'll kind of explain along the way as well. So President Joe Biden's administration held firm on proposed Medicare Advantage rates Monday, a break with recent practice that means health insurers are now facing lower payments than they'd anticipated for 2025. As a result, insurers may recalibrate the benefits they offer and the prices they charge for Medicare Advantage plans that cover 32 million seniors and people with disabilities. So obviously, guys, you know Medicare. Medicare is the government's healthcare assistance program, whereby the government pays money to private healthcare companies, and then those private, it's basically a subsidy. They're subsidizing the healthcare issuers. And then healthcare issuers, in turn, they're the ones that are consumer facing and collect premiums from people who want health insurance. So the government is subsidizing private corporations with a little bit of, well, a lot of money actually, close to $500 billion. And thereafter, private healthcare issuers are getting clients, right? And the fact that the government is subsidizing a lot of these costs allows these health insurance providers to keep rates low and to keep customers happy with the cost of medical insurance. I know for a lot of US citizens, medical insurance is a cost burden. It's a very high cost for a lot of people, right? But imagine what it would be if the government wasn't subsidizing literally almost half of all premiums. Well, everybody's premiums will be 2 times higher, right? So every single year, the government renegotiates how much money they're going to give to private healthcare insurance companies. And this was the subject of the day. The healthcare companies were very disappointed with the renegotiated rate that the government agreed to pay them. As a matter of fact, with inflation and everything, the healthcare companies now are actually losing money on a year-over-year basis. So let's go further into the article and it explains it a bit better. So the government paid private health insurers $455 billion last year to cover more than half of people on Medicare. Companies selling Medicare Advantage plans will have to determine what their benefits and prices for 2025 will look like by June. They have a lot of levers to respond to the new rates and may hesitate to raise prices or cut benefits because they could lose customers. It's a competitive environment. So obviously, if the government isn't agreeing to pay more money to healthcare companies, well, healthcare companies, they're going to have to find the money somewhere, right? Where can they find the money? They either have to cut certain benefits or they have to raise prices. Those two things signal a loss of either margins or a loss of customers as a whole. Not very good. Here is where we get into why this is problematic. Given inflation, the 2025 rates amount to a cut in government funding. National plans may decide to pull back from some markets where it's costlier to operate. It's a real tightrope walk. U.S. payments to Medicare Advantage plans will climb 3.7% on average in 2025. The industry regulator announced Monday the same increase that was proposed in January. A lot of people were expecting this to be a bluff by the Biden administration. They were expecting this number of 3.7 to be 4.7 upon release yesterday, but it actually wasn't. They maintained firm at 3.7, meaning they will give healthcare issuers, right, a 3.7% bump on the prices that they're willing to pay to those insurance companies to aid in customer billing, of course, right? This will represent a 0.16 decline after excluding an estimate of how plans code for patient illnesses, which can boost payments. The announcement is closely watched by investors. Wall Street had expected at least a 1% improvement from the preliminary rates. So that's why a lot of companies, guys, really had a steep decline in healthcare today. Basically, guys, with the cost of inflation, right, especially for medical insurance and in just medical services as a whole, guys, inflation last year was about 5%. So obviously, if the government is only increasing current allocation or current subsidies to these companies by 3.7, and inflation last year was 5% and is going to be roughly around 3.5-4% this year, they're actually losing money to inflation, a lot of these companies. So the reason of the decline was Wall Street was forecasting, this is going to signal a decline in these companies' profits because, for one, they're probably not going to want to lose customers. So what they'll have to do, guys, is they're going to maintain the cost of their plans the same while receiving less money from the government. So that just erodes their profit margins, right? They will have to pay the difference from their own pockets instead of being able to get that money from the government's pockets. So that's why you had such a steep decline on your healthcare stocks. Hopefully I explained that well. I know it's a very, it's a very cumbersome topic, especially healthcare and medical insurance. So hopefully I was able to, do it justice by explaining that the amount of money that the government was willing to give them this year just doesn't cover the rise in the cost of inflation, and that's going to erode these companies' margins. So in terms of healthcare, this obviously triggered a heck of a sell-off here today, and we lost a crucial level. We were in a daily uptrend, and you can see the bears completely engulfing the move and even losing our month-long support level right down here at about the 144.50. So now at this point, you could be expecting with such an engulfing move, a lower high. If we dip, even more tomorrow, it gives the bears even more of a chance. Set the lower high, use this prior support as resistance, and then potentially set the daily downtrend on healthcare. Healthcare really has not been in a daily downtrend for quite a long time at this point, guys. You would have to go back to early January to find a daily downtrend, and it was only for one day before the bulls were able to really recapture that. An extended downtrend would be all the way back in the month of October. So we'll keep a close eye on this. Loss of the daily uptrend, even your MACD starting to cross here, and even your RSI really starting to curl heavily to the downside. As a matter of fact, if the week closes like this too, it'll be a weekly downtrend, guys. This will be the first of all of your major sectors that would be in a major weekly downtrend. SPY, still weekly uptrend. QQQ, still weekly uptrend. Got to keep a close watch. However, guys, on this level down here, 423, that loss of that would be a loss of the weekly trend. And XLF still in a beautiful weekly uptrend as well. But XLV, the first one potentially to lose the weekly uptrend. Loss of the weekly uptrend just means monthly consolidation. So keep a close eye if we continue to dip here, guys. Previous all-time highs, 142 levels. That previous resistance should act as newfound support for your bulls. Should provide some decent areas for a monthly higher low for a potential trend continuation later on in the year. So healthcare looking fairly dicey currently. We'll see how the week ends for sure. But notable to us, guys, that one of our major three components of SPY has potentially lost the weekly uptrend into a weekly downtrend. The other one that's closest to doing it, is going to be QQQ at this point. Not the higher low here, it's right here at 434 roughly. Lose this, and you also lose the weekly uptrend on QQQ, something that has not happened since the sell-off of last fall. So really, QQQ and healthcare on a close watch. Now, moving on to IWM Russell. IWM Russell also losing the daily uptrend. So take a look here. We're taking a look at the higher low 205, flushed the higher low. And now the bulls have essentially lost the daily uptrend. And we're going to be looking, can the bear set up the lower high into lower low flush, which would just be extended weekly consolidation? At that point, we'll be looking out for the 200 mark to act as our last line of defense in the context of this weekly uptrend. Lose that and you lose the weekly uptrend. You set up something like this, potentially to last through the month of April and potentially even into the month of May. It's a good thing that we're coming up on a very big support level. This red box, which was previous resistance for about a year and a half, prior support, should be acting as some support levels for the bulls. So we'll see how we react to that level when we come to it. Definitely not a good start to the month though for the Russell, really pulling back, losing your short-term timeframes into weekly consolidation already. So we'll keep a very close watch on the Russell moving forward. Definitely the narrative of higher rates for longer hurting the growth stocks as a whole. Now moving on to Dow Jones. So Dow Jones also losing one of our key levels here today, guys. Losing our previous resistance, which was support, lost that, and also double top at the all-time highs, right? We were watching. If we lost these lows, it's now a daily downtrend. So the Dow Jones as well, now in daily downtrend territory. They did do that back here in early March before they were able to recover that. But it is notable to us whenever the Dow Jones loses the daily uptrend, because this would only be one and now two times that they've lost the daily uptrend in the last 4 or 5 months. You'd have to go all the way back to October to find a similar scenario. So we're going to keep an eye on this, guys. Definitely a little bit of a red flag on the Dow Jones here. And also in terms of your weekly, well, your weekly, you can see here, guys, that your weekly is starting to curl, and even the MACD, the momentum is really starting to point to potential downside continuation. It's a very good thing that your weekly bulls are in full bull control mode at this point. Your weekly higher lows are down here 38,500 is going to be the cannot lose area. Lose this, you lose the weekly uptrend, you set yourself up for a potential rocky start to the month of April and continuation through April. At that point, however, we'd be looking for a monthly higher low. So in all of these charts, guys, your monthly bulls are in full control. Weekly bulls are also in full control. So there's no risk there. The risks are starting to appear on the lower time frames. As I've said, one day is not enough. We really need to see continued daily downtrend and continued weekly sell-offs to really start getting an idea here. This is going to happen, guys, over the next week, week and a half. The next week and a half, we get continued sell-off here. Well, we are going to get that extended weekly declines here and bring us down to more respectable levels. At this point, if we do pull back all the way here, people are going to be panicking. I'll tell you guys, people will be panicking. They'll be saying higher for longer, no rate cuts this year, inflation is coming back. They will throw every single psychological factor at you. What you have to remember, your job as a trader and investor, is to remember who is in long-term control. And at this point, it is still your bulls with a wide margin to set all monthly higher lows across all of your major indexes. SPY, QQQ, XLF, XLV as well. We're all in the context of an extremely bullish market, extremely bullish macro backdrop as well. So just do not get scared. If you're a long-term investor, there is no reason to be panicking right now. If anything, you'll just have better and better dip opportunities to dollar cost average. Where it gets a little bit more tricky is if you're trading, right? If you're trading and you want to avoid this, as I've always said, at this point, guys, going back to the last month and a half, I've always maintained it's a good time to be taking profits, to potentially be hedging your portfolio for the potential event of a technical sell-off that we've been talking about now for the last month and a half. That's how long these markets have been extended. It's very tough to predict when they will turn and what elements of data they'll use to turn it. As you can see, we're turning over now, guys, right? All of these major indexes are turning over currently on the short-term timeframes. However, none of the macro data has changed. Jerome Powell's been saying higher for longer now at this point, guys, for the past 6 months. It's now only that the markets are starting to realize, wow, we may actually be sitting at higher for longer. So there's a real disconnect, right? It's tough to predict when the markets will actually start pricing in higher for longer, because so far they have not priced in higher for longer, have they? It's just been continuous rise. Any bad news is interpreted as another reason to just push the markets higher. But now at this point, guys, it may be just time for the markets to face a little bit of a sell-off here that we didn't get in February. We didn't get it in March. So maybe April will be the month. One thing's for sure, though, this year, in my opinion, should be a very good year. None of the data is bad yet. We'll keep a look at it every single day on the channel. And I'll tell you guys, if ever the long-term thesis changes. But as of now, the macro thesis is unchanged, and our long-term bull control of all of these indexes also has not changed. So just keep that in mind, guys. No need to panic just yet. Now, moving on to crypto, because crypto moved a bunch today. So crypto also reacting negatively to the downside. Really no other factors, guys, other than the fact that everything has moved a lot in the last 4 or 5 months. And now higher for longer seems to be setting into risk assets as well. So Bitcoin losing a bit of your daily uptrend momentum right here. Daily, they lost pretty much your higher lows, and now daily downtrend has commenced. We are now into further weekly consolidation. So Bitcoin has kind of been going sideways on the weekly here. If we were to flush 61,000, we would be in a weekly downtrend. But keep in mind, who is in control of the long-term time frame here? The monthly bulls, obviously. Coming down all the way down into this area, guys, 57,000 is a likely area that we could be defending by the bulls if ever these charts really start to unravel with the rest of the markets over the next coming weeks. All in all, Bitcoin still looking very healthy on the longer term timeframes. And if it comes down here, 56, 57, I will definitely be adding to a few positions. My end of year 2025 target for Bitcoin is at least $125,000. And that's based off of previous halving event cycles and previous bull market cycles as a whole. So everything in crypto still looking healthy despite this little bit of a sell-off. The areas you really need to watch, guys, is coming down 62, 61,000, right? Lose that, well, you'll be in a daily downtrend, of course, but you will also lose the weekly downtrend at that point, and then just healthy monthly consolidation, maybe continuing through the month of April, even beginning of May, bringing us down into this area. As you can see, right, these bull markets are marked sometimes with a little bit of monthly sell-off before another future leg up. Now, moving on to Ethereum. So Ethereum as well in the exact same boat as Bitcoin at this point, tried to get the new daily uptrend, failed, double top here, now daily downtrend. So short-term bears are in control. At that point, since we're in a daily downtrend, you have to look for continued weekly consolidation, and Ethereum as well, right? Potentially setting up for a weekly downtrend. That would be a break of roughly, let's call it 30.70. Break that to the downside, weekly downtrend is underway, and then you'll just be looking for further monthly consolidation, guys. Further monthly consolidation could take us down $2,700, $2,800 would be a sweet spot right in line with our previous support area down here. So if we do pull back, that would be very healthy weekly consolidation, monthly consolidation as well before a potential further leg up. So crypto not looking the best right now for short-term continuation of the upside. Bears are in short-term control and potentially even getting into weekly control as well. One thing's for sure though, these in my opinion are long-term dip buying opportunities for the continued bull market in 2024 and 2025 alike. Now, let's move into our big tech stocks. All right, so moving on to Apple here. So you can see Apple, guys, still in the context of a daily downtrend. Unfortunately, Apple down about 0.7% on the day, but they did have some relatively decent news on the day, more specifically in light of their AI advancements. So take a look at this here, guys. Pulled up a little article for us to go over together. Apple quietly unveils new AI model, Realm, that outperforms OpenAI's GPT-4 ChatGPT, despite being much lighter and faster than the platform. Very, very nice indeed. So they released a new AI model that's better than ChatGPT in parsing contextual data, a significant development ahead of the company's AI initiative's launch in June. Now, Apple's AI research has resulted in a model that can convert any given context into text, making it easier for large language models to parse. Apple could leverage this to enhance Siri, its virtual assistant. Very, very nice indeed here, guys. So it's very good that Apple's finally getting some positive news on its AI developments after being plagued by headlines that is saying that they're currently behind. Now, how this could impact Siri, guys, it gives context to questions that you may ask to the model. So a lot of criticism of Siri is that it's not a true virtual assistant, right? If I were to ask Siri, for example, Siri, tell me about New York City. Let's say I know nothing about New York City, right? Siri, tell me about New York City. All it's going to do is it's going to say, sure, here's what I found for you on the web in relation to New York. And then I have to click on it and read through it myself. Imagine if Siri was actually able to answer questions for you in real time, similar to ChatGPT. If I ask Siri, hey Siri, tell me about New York, it can then literally answer me, well, William, I'm glad you asked. Here is what's good about New York. Here's what's bad, what not, So that could be a very nice advancement for Apple in the form of AI to include some of those features, those large language model features, into their own virtual assistant in the name of Siri. So that was a very good news headline for them on the day. Still was not spared from the broad market sell-off, however. So take a look here, guys. We're still in the context of a daily downtrend right now, and we're kind of operating towards the lower end of our support range. The last line of defense is down here at 166, and after that, we really fall off here to about the 155, 150 level. But still, in my opinion, guys, the reward to risk is fairly good right now. Keep in mind that the downside risk at this point, let's say we were going to go down all the way, let's just call it 155, 150, right? So from current levels, that would be a drop of roughly 9 to about 12% at the steepest, right? But what are the upside targets? Well, we have all-time highs, obviously, but the price targets for Apple usually range between $210 and $220. So take a look from current price to the all-time highs, that's about 18, 19%. 210 would give us about 26% worth of upside. So you're only risking about 10, 12% to the downside here. And I really don't believe anybody would really be selling their Apple shares down here. Most likely you just pick up more, right? So it would kind of just be just a drawdown cycle. So your max drawdown at this point, in my opinion, for Apple's cycle would be about 150, 155. Weekly 12 EMA is right. A weekly 200 week moving average has been there. How many times has Apple lost the 200 weekly moving average? Not much in the last 15 years, have they? So that would really be the maximum drawdown level for you, about the 150 mark. And the upside is really literally twice, right? So very good. It's about a 2-to-1 reward to risk. So very good trade in my opinion, despite the fact that the bulls are still weak right now. Still need to watch them mount above. Now, if you want the bulls to regain control from here, it's very, very simple. We need to put in a significant bounce as high as possible in relation to 173.25. If we can create some space off the lows here, it sets the bulls up nicely for a daily uptrend reversal, similar to the one they mounted right back here. So that's what we'll be watching out for on Apple specifically over the next coming days and coming weeks as well. I just reiterate, guys, that this is still a tremendous buying opportunity for Apple stock as a whole. So just need to keep a close eye on what your short-term bulls are doing. Now, second, we're going to move into AMD. So AMD also not looking too bad. AMD still in the context of this daily downtrend, right? We're trying to engulf the most recent leg of selling, but now as of today, guys, coming down a little bit hard, right? 2.53%. AMD was really down almost 4% on the day, but recovering nicely intraday, roughly about half of that, right? So key level on the watch remains 173. Break 173 to the downside, well, your daily downtrend simply continues, and then we look to our weekly levels to hold. This is a hugely important level, guys. Lower 164 to 158. It's the bottom end of this range that AMD was trapped in a majority of January and February, right? 5-6 weeks, and the previous all-time high resistance. So this area right down here is extremely solid. In my opinion, still represents a very juicy opportunity for a first bounce trade. If we pull down hard into this area, we could be writing some short puts, 165 down to 168, and the bulls should be able to at least bottom out here once and provide a little bit of a relief rally. So this first touch of this area is going to be a very juicy trade opportunity most likely. That being said, the weekly, the bulls have lost a lot of ground, right? Take a look at this big engulfing move. You put the fib on this, right? And you can see that the bulls have lost 80% of the move back to the bears. So the best case that can happen for the bulls, in my opinion, well, it's not going to be the V-shape. The V-shape is highly unlikely, guys. When we take back so much of a move, especially on weekly charts, very tough to get the V-shape. The best case scenario that they can maybe work out at this point is a tightening range, hopefully above your yellow line right here, hopefully above your 183, right? Need to get it back above here, mount above, and then we can kind of slowly move sideways until maybe earnings end of April. That would be the best case scenario for the bulls, in my opinion. That being said, the weekly higher lows are still a ways away. 162 is the area to watch. Lose this, and it's not going to be looking very good for the bulls. We'll tackle that once we get there. That could set up the lower high into lower low, and that, guys, would be a head and shoulders pattern, right? We could be heading a bit lower. So far, though, no indication of that. That's still a few weeks of trading away, so I don't want to get ahead of myself. As of now, really looking for two things. The break of 172.50 to the downside here, continued daily downtrend, looking for a bounce trade opportunity down here. And to the upside, obviously need to break 187.50. Break that to the upside, daily uptrend resumes, and then we look how much of this bounce can the bulls take back to then get a better indication of whether we're set up for a recapture of the weekly uptrend or maybe just a tightening range off of a shallow bounce. Could just end up getting a little bit of a tightening range here. So the key is going to be the size of the bounce when it happens. We'll be keeping a close eye on it on the channel. Now, lastly, moving into Amazon here. So Amazon, I drew this on the chart. Amazon, little bit of a tightening range right now, right? So what is happening is the highs are not able to mount above considerably. You can see the bulls are struggling here to really push highs higher, but the lows are coming up significantly. It gives us a tightening rising wedge. This usually is a bearish pattern, guys. Where have we seen that before? We've seen that before when I drafted a similar chart on financials most recently, all right? So financials were exhibiting largely the same scenario to where the tops were relatively streamlined, the bottoms were getting higher and higher and higher. We were in a tightening range scenario, an ascending wedge scenario, whereby sometimes these usually break bearish. As a matter of fact, a lot of the times they do break bearish, but this case, you can see that sometimes the bulls can take control as well. The thing is that, guys, with these patterns, even though they're bearish patterns, their probability of success is only about 65, 70%. So there's a whole like 30, 35% of the times that these just break bullish. But overall, it's a bearish pattern. We have to keep a close eye on this as a whole. As of now, the bulls still remain in full control. Daily uptrend is underway. Keep an eye on these lows. 177, guys. Lose 177. You lose a daily uptrend. You set the bears up for a potential daily downtrend and potential further weekly consolidation. At that point, we'll be looking out to 172 to play as our last line of weekly defense for the bulls. So we'll tackle that when we get to there. Everything's looking good on the higher time frames though, guys. Monthly uptrend is gorgeous. Weekly uptrend also is very, very, very beautiful. They've held it for a very long time at this point. It's just we're kind of struggling to really mount and put in a significant rally much above the 178 mark. And I do think a large contributor to this, guys, is just overall tech, right? Just even QQQ as a whole has just been struggling for the last 4, 5, 6 weeks at this point to really mount above. And a lot of your tech names that have broken out, guys, you know, as we'll take a look at later on in the video, I mean, even Meta, right? Meta struggling to break out of its all-time highs. Microsoft struggling to break out of the all-time highs. Even a company like Netflix, right, has been grinding higher, but for the past 5, 6 weeks has really been just sidelined at this point. And Amazon displaying a few of those characteristics too. It wants to run, but overall market conditions, right, just not allowing it to run too much as of now. People are still very wary of a potential technical sell-off after such a great last 4 or 5 months, but Amazon's still looking good. No red flags as a whole. So we'll keep a close eye on this, guys, over the next coming days and weeks, see how this develops. One thing for sure, guys, if we come down here for the next couple of weeks with a broad market sell-off, come back down here into the lower 170 range, I'm definitely going to be buying. I think it's one of the last opportunities to maybe be picking up Amazon, you know, before they report extremely bullish earnings. I think the company is going to report stellar earnings every single quarter this year. At least that is what they guided for in their most recent earnings that we had all the way back here. So Amazon with some good continuation. Moving on to Google right here, looking fairly good indeed, right, guys? So as a whole, Google not looking bad, still in the context of a gorgeous daily uptrend, pulling a little bit back after yesterday's highs, about 0.4% to the downside. That's okay though, they can afford it. Anything above 147.20, just looking for the daily higher low before further trend continuation. Google, one of our strongest names in big tech so far, so looking for them to just continue this momentum towards the higher levels. Now currently, you know, battling with our previous all-time highs. So the bulls in full control. On the weekly, same thing, right? We had a little bit of a weekly downtrend here going for a while on Google. They've since engulfed that in one single move. So if the rest of the market sells off and we do get a little bit of a daily downtrend, no problem at all. Weekly bulls, so much space to set a weekly higher low for a trend increase. If for some rich reason in the next few weeks, guys, we come all the way down here and fill this gap area. This was the gap created by the news that Apple and Google were maybe partnering on AI. If ever over the next couple of weeks we pull back down into this area, that would be a decent sell-off for Google. That would be about, you know, 6-7%. Looking for the weekly higher low. Huge area of support. This green box right here, big area of support. Previous all-time high, struggling there. Resistance, support level. This will be my buy zone for Google for the rest of the year. So looking good. Moving on to Meta. Meta also recovering quite nicely here today. We're now back above this coveted line that I've kept on the chart now ever since the post-earnings move, right? So that line is going to be set at 490. 490, 491, right? This is the most important level for Meta still, in my opinion, right now. Why? Because if we lose this, we're in jeopardy of losing it yesterday, right? If you lose that line, you lose the daily uptrend, you lose support, and you also lose your moving averages, right? Look at this 12 EMA, the 26 EMA is there as well. So if we set the lower high, lower low, daily downtrend started on Meta, and then we are into further weekly consolidation. And keep an eye on Meta here, guys, right? Anything above 455, just looking for continued weekly consolidation at this point, just looking for the weekly higher low. Since we haven't cracked to new highs really, haven't really cracked the lows, we're not yet in a weekly downtrend. Weekly downtrend would be something like this, right? So Meta bulls still looking half decent, have to admit. They held up better than most. The only green tech name across the board over the course of the day today. So looking good. But if ever Meta gives this up as well into weekly consolidation, into monthly consolidation as well, will just be a great buying opportunity. I would personally like to see at 450, 460. If we can get down there, guys, before earnings, I think Meta is going to outperform on earnings as well. So if we come down into here, into these lower levels, guys, before earnings, I do think it's a great opportunity to be swing trading Meta for the rest of the year. They should also have a year of outperformance. Now moving on to Microsoft. Microsoft only down 0.74%. However, we have set a new daily downtrend on Microsoft, unfortunately. So we had the daily uptrend for us going. We were looking for the higher low. Bulls popped yesterday, but lower high, lower low set in motion today. Now, the good thing is that we're coming up on a big area of support, which is first 415.71. Below that, we end up in this big range. Reminds me a bit of AMD, right? Where we kind of looked above this range temporarily and then trended back into it. Well, keep an eye on that for Microsoft as well, because if we lose this line right here, 416, 415, and start dipping back into this area, at least we have a whole lot of bullish support at the lower levels. However, that would be on the weekly. A look above and break down below just signifies that bulls are just not ready to make that move just yet. Maybe waiting for a little bit of earnings, 23rd of April. So your bulls now looking, looking like a little bit weak on the daily charts, but on the weekly, guys, there's still so much space. Keep in mind, we are in a weekly uptrend, just looking for a weekly higher low, anything above the lower end of this range, 399, weekly higher low for further trend increase, and monthly bulls are obviously in full control. So even if the month of March is a little bit of sideways consolidation, it would not be bad for the stock as a whole. Look, weekly MACD also crossing, guys. Have to show this on a lot of different charts, right? Apple's been in a weekly downtrend, so we're not going to look at that one. AMD, weekly MACD crossing, right? Amazon, not yet, but looking a little bit weak on the top. We highlighted that with the tightening range. The bulls' inability to put in much higher highs while we're getting tighter and tighter and tighter on these lows just shows a lack of momentum to the upside. And you see that best on the weekly MACD, really starting to flatten out a little bit. So we're going to keep an eye on that. Google, well, Google just recovered tremendously, so we can't see it there. But even Meta curling over, right? Starting to curl over, looking a little bit weak despite showing up, despite holding these levels quite nicely. Microsoft, another one of these stocks, right? MACD starting to curl over. So just looking like the bulls are tired. The best case scenario, guys, for the bulls is we sell off these entire markets, sell off before earnings. And then when we get our bank earnings and big tech earnings, they say, no reason to worry. Our profits are still good. We're still having EPS expansion. Revenues are still expanding. And then a lot of these big names will be able to save, quote unquote, save a potential downtrending on the weekly for a lot of these, a lot of our indexes and even some potential weekly downtrending stocks, such as the likes of Apple, and maybe a few others as well. So let's just keep an eye on those guys. That's one of the scenarios I've been running through my head. If we get some sell-off prior to earnings and then earnings come in fairly good, because they should be fairly good for big tech. Big tech has a lot of cash. They're not really beholden to interest rates right now. And business to business for them has been relatively good. So no real red flags there. They should be doing well on earnings. So could we get some sell-offs on a lot of these stocks? Well, that was a bit much, right? But could we get a little bit of sell-offs here prior to earnings, and then earnings just reiterate that a lot of these companies are going to outperform this year? That's a very likely scenario. Now moving on to Netflix. Netflix, flat on the day, about 0.02% to the downside. Netflix, we're still looking out for the potential lower high, lower low. Why? Because we lost a crucial level, the 12 EMA that's been defense for this stock for a better part of the last 3 months since their last earnings, right? Now at this point, we've lost a few things. We've lost the 12 EMA. We've also lost our most recent low, a higher low here, which was set 605.62. We've taken it out. So now the bears have a chance at setting the daily downtrend, similar to what they've done on QQQ. If ever we get the daily downtrend rollover, guys, keep in mind Netflix has a lot of space. Anything above 550, just looking for a weekly higher low for further trend continuation. So Netflix, if the rest of the market consolidates for the next couple of weeks because of a technical sell-off, leading into earnings, I do think we have a good chance of maybe retesting this 575 zone. That's going to be a huge level. It was a huge level in the past. Will definitely be acting as support. Your moving average is down there as well. So we come down there in the next couple of weeks leading into our earnings, which is only on Thursday the 18th, right? So very close right now, about 2 weeks away at this point, right? So if we come down to this level and then Netflix has a crazy earnings outperform, we may just get that the higher low, right? May just get the weekly higher low for potential further trend increase. At that point, we'll be attacking the all-time highs. Could look something like this, right? For the start of the month of April, this candle pulling down ever so slightly, and then we get good earnings, and it just continues to the upside. So that's a scenario that I'm also looking out for on Netflix. Now moving on to NVIDIA. Give me a quick second again. All right, so moving on to NVIDIA, guys. NVIDIA, not looking too bad, even though we did lose the 12 EMA. Haven't lost a 12 EMA since prior to earnings, these two candles right here. So loss of the 12 EMA, but not loss of the daily uptrend just yet. That would be at 850, guys. 850, such a crucial level. If you lose that, you would lose the daily uptrend. But NVIDIA has lost the daily uptrend in the past right here, but they haven't set the daily downtrend. That would be lower high, lower low, that would be a daily downtrend. So even if we lose the daily uptrend right here, the bulls still have a chance at recapturing that with a two-step move back higher, right? But it would be notable to us losing that in that fashion, right? Because then the bears obviously have the chance at lower high, lower low. So 850, crucial level. As of now, no red flags, still maintaining this relatively tight range right now. I'm going to be watching for the break of 850 very, very closely. But as of now, your shorter term bulls tried their best today to maintain this. What we need to see desperately from your bulls right now, if you want to see the recovery, watch the hourly time frame. If we get a new hourly uptrend into tomorrow, it means that your daily higher low is most likely set. Then we look, can we get a move and break these highs, continue this daily uptrend? Or will the bulls lose it midway through, lower high into lower low? That would be daily downtrend. That would be weekly consolidation underway. And at that point, guys, we'd be looking 800 down to 750 would be a true sweet spot for this stock. If we can get that, I will be buying down here. And that's not bearish, guys. That's extremely bullish. Higher low, continuation for the rest of the year, even on the monthly. If April is a bit red for NVIDIA, right, would not be a big problem. Look at this, guys, right? A little bit of consolidation and move. A little bit of consolidation and move is the same thing I'm expecting for the stock as well. Moving on to Tesla. So Tesla had deliveries today and they were not very good. So Tesla down about 5% on the day. It was a whole lot worse in the morning here, guys. Take a look at how much Tesla gapped down. The bulls tried desperately to recover this all throughout the day. But at one point during the day, guys, from yesterday's close, we were down like 7.5%. It was not a pretty day. So what exactly happened? Well, they missed. And we've been saying this for a while on the channel here, guys. One of the reasons I was not willing to play Tesla stock, even though we were low, is because we were expecting deliveries to come in lower for a few reasons that the article breaks down as well. Tesla shares fall after deliveries drop 8.5% from a year ago. Not one of their best quarters. Tesla reported first quarter vehicle sales, deliveries rather, of 386,000, a drop of 8.5% from the same quarter last year. Not very good. According to a mean of 11 estimates compiled by FactSets, analysts were expecting deliveries around 457,000 for the first 3 months of the year. Look at this miss. That is a very big miss indeed, guys. You're talking roughly, almost a 20% miss from your analyst mean. That is the pretty much the average, right? Crazy miss indeed. This was Tesla's first year-over-year decline in deliveries since 2020, when its operations were disrupted by the global pandemic. Let's take a look at a few of the reasons why. I was going to go over them myself, but the article covers them as well. We've talked about them on the channel. So take a look. Total deliveries, 387K. Total production, much higher, guys. So they're sitting on a ton of inventory right now. Well, not a ton, but in relation to the fact that Tesla's usually been able to deliver almost everything that they produce, now you're seeing a big gap starting to materialize. Tesla's deliveries for the quarter fell far below even the most bearish of analyst expectations. Independent auto industry researcher Troy Teslike, he's very big on Twitter, guys. He does his own analysis on Twitter, and usually he's a perma Tesla bull, whose work is closely followed by Tesla fans, had expected deliveries to come in around 409K. So his estimate was even more bearish than the analyst mean of about 457. He was at 409, and they even came below his bearish expectation. Was not good at all, right? So take a look at why this was the case. And we've been talking about this, guys, all throughout the first quarter, right? There are challenges with the price war that they have in China, the Red Sea debacle. We're going to get into it right now, right? So Tesla faced numerous challenges in the first quarter. Houthi militia attacks on shippers in the Red Sea disrupted Tesla's component supply and temporarily suspended production at its German factory outside of Berlin in January. 2-week shutdown because of the implications of the Red Sea warfare that's going on right now, right? In March, environmental activists set fire to infrastructure near that same factory, depriving Tesla of sufficient operation power and again causing a pause in production. So Berlin not really ramping up well. In China, Tesla faced an onslaught of competition from domestic EV makers in China, including BYD and newcomers such as the phone maker Xiaomi. After sluggish sales numbers from its China-made cars in January and February, Tesla reduced production of its Model 3 and Model Y at its Shanghai plant and slashed workers' schedules to 5 days a week from 6.5. So cutting down on production and also getting into a price war. Two very negative things. In the US, reviews were mixed for Tesla's newest model, which is the Cybertruck, which the EV maker only began to sell in small numbers in December last year. Still no full ramp on the Cybertruck, excuse me. A series of discounts and incentives appeared to be less effective in driving sales volume than in the past for Tesla. So really, everybody that's wanted a Tesla has now got it. Even with more price decreases, guys, Tesla's just not able to sell any more cars. We've said this on a channel. It's not a Tesla problem. It's an overall auto industry problem because of high interest rates. Financing a car is one of the most important decisions that a lot of people make in their entire lives. And financing a car at 7-8% is just not worth it for a lot of people, guys. So that's why demand for the entire auto industry has just been down. And a lot of people, Mercedes, Volkswagen, so many people have been cutting back production of EVs, especially because most of those car manufacturers lose money on every single EV they produce. Prospective Tesla customers in the US comprised a shrinking group in the first quarter of 2024, according to a report by Reuters, citing survey data from Caliber. The report attributed the drop in interest to Tesla from customers to Musk's persona. Take a look at this chart. U.S. consumers' attitudes towards Tesla. This is the Reuters article they're referencing. Consumer responses to question on whether they trust Tesla, and would consider buying one. Take a look at this net drop off, guys. Trust and consideration for the brand has been considerably down over the course of the past 2 years. And a lot of people are saying that Musk is the reason for that, right? So, here we go. It's very likely that Musk himself is contributing to the reputational downfall, right? It's hard enough to win sales without getting into politics. We've talked about this a lot on the channel here, guys, as well, right? Elon Musk's politics may have finally caught up with him. People want him to stop spending so much time at Twitter talking about politics and whatnot, and start spending more time on Tesla as a brand as a whole. So all those things combined, guys, unfortunately affecting Tesla negatively to the downside. You can see here that that's why we weren't really giving price targets for the foreseeable future, right? Because of how high of an impact deliveries were going to have. So take a look at this. This is why we were in a daily uptrend, but deliveries just erased that in one day. So now your bears have an engulfing move, could be expecting lower high into lower low if just the vision of the brand by retail and institutional investors alike just starts waning even further. As I said, guys, I don't think this is peak fear for Tesla. Most likely that will come, in my opinion, in the month of May or June when they're midway through the quarter, more price cuts, more expected delivery declines. That is when Tesla is going to hit peak fear, because after that, at least we get some interest rate declines in the month of June or July. So at least that should be able to slightly start stimulating demand for cars as a whole. But as of now, guys, Tesla's still in its bottoming out process on the weekly as well. Very weak weekly bounce as well, right? The bounce was just not high enough. Take a look at this weekly bounce. Only 50%. I was saying I need to get this bounce as high as 190 to about 195 to be convinced that the bulls have a chance at reversing these weekly declines. So far, no go. Relatively weak as well. Downtrend on the daily, continued downtrend on the weekly. So at this point, guys, we have to target our lower end of support areas, and those really stand at the lower end of the trend line right now, 152, 150, and that also coincides with our last area of support down here, which was the last area of weekly support after the May and June sell-off of last year. So hopefully the bulls are able to hold these levels. All relies on earnings coming up in the next 2 weeks. Obviously, with deliveries coming in lower than expected, we obviously have to forecast revenue declines for the company. A key component will be what is the effect on margin and what is the effect on free cash flow. And in my opinion, with the cuts, right, with the fact that Tesla has cut their prices a lot this current year, I don't believe that the effects are going to be positive. So we're going to see year-over-year declines in free cash flow, year-over-year declines in margin once again, and now year-over-year declines in revenue. It's just not going to look good for Tesla on their quarterly earnings. Hopefully, for the stock and for investors alike, hopefully a lot of that decline has been priced into the stock already. But You know, if earnings are bad, I would not be surprised, guys, if we get another big red candle, maybe down into the 150 zone, which really is going to be, you know, it's going to start to get peak fear for Tesla, that's for sure. If we start dipping below 150, 140, that'll really be peak fear for this stock, in my opinion. I'm not really touching it until I get earnings and until I hear from management how they're going to address the current situation for the company. So let's keep posted on that. I'll just remind you guys, I may sound very bullish, I may sound very bearish, but I'm a long-term bull on the company. I've never sold, you know, I still have my long-term shares of the company. I haven't been swing trading them as much, but I'm still a long-term believer in what Tesla stands for. I still believe that they're going to make tremendous advancements in their energy markets, and also in robotics as well. I still believe that they have one of the most efficient production processes in all of the auto industry as a whole. And I still believe they have one of the best potential products on the entire planet if they can solve FSD. But all those things combined, guys, they take time. Robotics, energy expansion, FSD, they're still a ways away. As of now, Tesla is still being viewed by Wall Street as a pure form car company. Should they be viewing it that way? Well, that's obviously my opinion or your opinion, right? Obviously, a lot of us understand that it's not just a car company, but you have to convince Wall Street of that as well. And for Wall Street to be convinced, they need to see those divisions start printing money hand over fist. So moving on to Palantir now at this point. Sorry for spending a bit too much time on Tesla, but I figure it's important, right? Now moving on to Palantir. Palantir daily downtrend simply continues right at this point. So daily downtrend into the lower end of our level, exactly what we were looking for here, guys. We're coming into our daily support level here. Weekly, unfortunately, guys, now at this point, we've lost the weekly uptrend. We've lost the higher lows right here. So now it opens the door for the bears to set the lower high into lower low. We're going to keep a close eye on this all the month of April. But one thing's for sure, coming up on a beautiful area of support, this current 21.5 all the way down to 19. Huge support in the past, decent resistance as well, should be acting as a first line of defense for the stock. And as we pull further into this area, I will get even more and more attracted to start buying up these levels. But as of now, guys, the bears, full control of your daily, expecting maybe a lower high at this point into lower low. We're below this most recent level, right? If I draw a line right here, you'll see why that level is important. A few times it touched it in the past. Touch here as well, close to here as well. So if we come up a little bit, expecting maybe lower high, have our moving averages there as well, maybe lower high into potentially a double bottom or lower low. One thing is for sure, guys, Palantir, when it comes down here, I will definitely be buying. Weekly, not looking the best, I'll give you that, but the monthly is where it's at, guys. The monthly bulls are in absolute full control. Just a healthy monthly consolidation right now. Going to be looking as close as possible. $20, the top of these prior monthly candles, will be key for this stock to respect. So great dip buying opportunity for Palantir for the rest of the year, in my opinion. Now moving on to PayPal lastly. So PayPal having a little bit of recovery day today, right? So PayPal was also affected by a very broad market sell-off in the morning, but the bulls doing a great job at trying to reestablish a semblance of an hourly uptrend into the end of the day. Now, PayPal has lost one of their daily uptrends here today. So it was a daily uptrend. Now, we were talking about this yesterday's video, loss of 64.82, you lose the daily uptrend, loss of the higher lows. It sets the bears up for lower high into lower low, and if the rest of the market continues pulling back, I do believe that this will manifest as well. Now, we will be looking at, guys, for the weekly pullback. This is going to be extremely important for PayPal to protect. Take a look. We are in the context of a weekly uptrend at this point, and we're starting to pull back into one of my key levels. We're looking for the higher low. We're looking for the weekly higher low right here. Where are we targeting? This big level between these two yellow lines. Huge chop zone right here. Previous resistance should be acting as a first line of defense. Getting caught up in the moving averages right now as well. This is going to be 63 down to $60. If we can pull back further into this area, daily downtrend, I'll probably be playing PayPal in this area because your long-term bulls now, guys, are starting to get in control of a few crucial levels. I've been showing this for the past 2 weeks at this point, right? We're now significantly above our downtrending channel line. This line right here, we've now been significantly above it. It is a technical breakout. We're now above our 200-day moving average. This green line haven't been above the 200-day moving average since 2021. We've been healthily above it now for a better part of the last 2 weeks as well. All of those are signaling that a technical breakout is underway, and we're even potentially on the way to changing the monthly uptrend into a monthly, well, the monthly downtrend, right, into a monthly uptrend for the first time in pretty much 3 years at this point. So everything's looking good for PayPal, but if the rest of the market pulls back, it won't be able to do it on its own. I need to see them hold 63 to 60. This might be, guys, one of our last available entries for PayPal before it really starts rallying, guys, into the later part of the year, especially with rates on the decrease. My first profit target for PayPal, or price target rather, because I won't be taking profits here. I'll be holding my long-term PayPal shares longer than that, but swing trade could be a decent area for take profit, $75. So everything looking good, but pulling back. The bulls losing the daily, so be on the watch for daily downtrend confirmation, which just leads in to some healthy weekly consolidation, a lot of space, anything pretty much above 57.50, just looking for the weekly higher low, this big area of confluence, right? 60 down, 63 down to 60. You see it best on the weekly, how tough it was for the market to get above this area, using the lower end of this area as resistance, right? So this huge area of confluence, weekly moving averages there as well. So that was pretty much everything I had for you guys today. Hopefully I didn't sound too bearish, but we have to be on the lookout for a lot of for this one specifically. We went over all these 5 indications. None of these are actually at play right now. The only one is some potential rotation, quarterly profit taking after such a nice start to the year. Bit of rotation, bit of profit taking, higher for longer, of course, is playing into that effect as well, right? So you're, kind of getting a little bit of short-term fear into the markets, even though it's been higher for longer now for the past 4 or 5 months. The market's finally starting to believe it after this extended rally. May just be time for a technical pullback. The rest of the macro is good, so let's keep a close eye on these dips. In my opinion, still a buying opportunity. So hopefully you guys enjoyed today's video. Hopefully I didn't sound too bearish, because you guys know me. In my opinion, this is a long-term bull market. We're set, guys, for the next 3, 4, 5 years. In my opinion, not much standing in the way of us, unless for some reason the economy severely deteriorates, the jobs market completely falls apart, and inflation literally skyrockets. And so far, guys, we just don't have any indication of that. I still do believe in the soft landing scenario, or even the no landing scenario, where the Fed can pull this off and equities will still be a very nice bullish trade for the next couple of years. So these are all long-term buying opportunities. It's just for some swing, for some of us who are swing traders, just be a little bit careful here, guys, over the next couple of weeks as we develop on these current levels. So hopefully you guys appreciated the videos. If you did, consider dropping a like. Really appreciate it for the channel growth. Consider subscribing to the channel as well. Would really love to have you here. We do these videos every Monday to Friday after the close, and we're almost at 1,000 subscribers, guys. I'm so happy. It's been such a pleasure to do these videos for all of you guys, and I can see by how many of you continue to subscribe that you guys appreciate them as well. So let's keep it up. Consider dropping a subscribe as well. And as usual, guys, if you have any questions whatsoever on the markets, on direction, if you want me to look at a specific stock ticker for you, just leave it down below in the comments and I'll be very happy to do that. So take care, guys. I'll see you tomorrow after the close. Let's take this one day at a time and be patient. Peace.